Thank you, thank you, thank you. Thank you so much for having us. As I said yesterday, we're extremely proud to be a platinum sponsor for the TUM Blockchain Conference. We love the approach you guys are doing, the academic focus, right? It's a very more conservative and tech focused. And I think this also matches quite well with the idea of Bitvavo and our goal, right? We want to make crypto very accessible for everyone, and we also want to bring more transparency into the whole market. And this is why I would like to do a short presentation about the differences between brokers and exchanges in the traditional aspect, but also now in the crypto space. So at the beginning, I would like to zoom out a little bit. Why are we doing this? Like, what kind of growth factors do we see? How is the market developing, and how can you compare the crypto space with other asset classes, for example? Then a quick introduction about Bitvavo. I think you heard a lot about us already if you stopped by at our booth. And then we really want to dive in. What is the difference between the exchange and the broker model in the traditional sense? Then go a little bit into what is the difference between the crypto exchange and the crypto broker? Have a quick look on matching engines, order books, and at the end, what's the impact on the cost, and why is it beneficial to trade at an exchange as a customer? So we at Bitvavo, we see 5 aspects or 5 driving factors which are driving the crypto adoption. The first one, I think that's quite an obvious one, the money supply and the current economic state. So the debt bubble is rising, doner kebab is probably twice as more expensive than like 5 years ago, right? So we see this, like, it's really coming into the minds of the people as well, that the euro is inflating, and you just get less for your money. The second point is the availability and the social trading, right? So we had this the GameStop mania. Trading in general and crypto is now super accessible for everyone. All you really need is your phone, you have an app, and that's all you need to actually enter the market. The third one, I think you've also maybe heard quite some talks about it. MiCA is finally arrived, right? So we have now this regulatory umbrella all over Europe. Institutions can now go into the market following certain kind of rules, and we with Bitvavo are very rigorous and strict on regulations in general, and that's why this was a big focus as well. And we see this institutional adoption in general. And I think it's quite interesting to kind of zoom out and see where do we come from, right? So we really come from the money launderer, the criminals, all of the bad guys, with now JP Morgan basically saying, hey, we are allowing our customers to trade crypto. So we really come from the one extreme to now the institutional adoption, and MiCA is one of the major factors. And the fifth point is the tokenization. I already had a couple good talks about tokenization in general, bringing real-world assets on-chain, right? We're not only speaking about like real-world assets that you see around, like real estate, diamonds, like everything that has value, basically, you can bring on-chain. But we're also speaking about just bringing the finance industry onto a new tech level, right? And I think this is the most fascinating one, where we now have the stablecoin move. We now have money markets funds that are all being put on chain because it's just more efficient. And I think that's the fascinating thing about blockchain in general. It's not the best technology out there, but it's a better technology that we have right now, and it's more efficient, it's faster than what we're used to. And since the finance industry hasn't seen any revolution or evolution in a long time, I think we are very at the verge of having this this flicking point of bringing the masses on chain. When I said let's zoom out a little bit, this is how far we've come. Bitcoin is the 6th biggest asset in the world, right behind Amazon. Ethereum is top 25. So we really came from something completely on the side to something that has a place in the people's minds in the biggest asset classes in the world. This slide, I think, is quite interesting. And before we look into this, I would like to know, maybe ask the crowd, how many Bitcoins do you think are in the ownership of institutions? Is anyone guessing how many Bitcoins are owned by the institutions right now? What do you say? 1 million. Yes, good guess, and it's quite correct. So for the first time ever, we crossed the 1 million level. So 1 million Bitcoins are now officially in the ownership of institutions. And I think this slide kind of shows what we've felt in the market, what we've seen. So we don't have any newspaper magazines talking about the new all-time high of Bitcoin. We don't have anyone, no cab driver talking about some meme coin. We have institutions, we have businesses, we have funds and ETFs buying Bitcoin. Who is selling? The individual, right? So we have a lot of burned people from the last bear market who basically now think it's the right time to sell. But who are they selling to? They're selling to institutions. And here we can see how small crypto is compared to other asset classes. We have the real estate asset class of like 38% of the total value of asset classes. Crypto is 0.2%. And we will see more and more, right, that some of the value from those other asset classes, they are flowing into Bitcoin. It's also proven that 3 to 5% allocation in your portfolio with crypto basically doesn't hurt you from the downside, or doesn't hurt the downside. You see this more and more coming as a just as a balanced portfolio. And yeah, I think that's extremely exciting times at the moment. Everyone speaks about MiCA, everyone speaks about Europe, but why is Europe actually so important? Here you can see Europe is the second biggest market right after the US. And this is why you see more and more crypto exchanges, you see more and more players now catering to the Europeans. And I think there it's quite interesting because we have, like, it's called like hyper-localization. And the US is not really comparable to Europe. So I think it's extremely important that that players who are entering the European markets, they really focus on targeting local areas, right? Like we cannot do a French advertisement in the German market. So you need native language, you need native approaches, and if you think Munich is so different from Berlin already, so you already need some sort of different approaches there. Now, a quick introduction to Bitwavo. So Bitwavo was founded in 2018. We are based in Amsterdam. It's quite funny because we have roughly an awareness of 1 to 2% in Germany, but we are market leader in the Benelux. So Bitwavo was just at the right place at the right time, I would say, in the Netherlands, and we had a massive organic traffic where we basically focused on handling the volume, on focusing just doing or providing a simple to use app. And this basically brought us now to over 2 million customers in Europe, whereas around 1 million are from the Netherlands. And if you think that you have roughly 2 million interested Dutch people, crypto enthusiasts in the Netherlands, we have roughly 50% of the market share of the Dutch crypto industry. We are MiCA regulated. We have an exchange and a custody license, and over 400 pairs. And the most interesting part, I think, the reason why Bitwavo is placed so well in the whole in the crypto space in Europe at the moment is that we have around 50% of the Euro spot volume, which means half of all the crypto to Euro trades are going through us. And this seems a lot. So the Euro spot market is quite a niche market in comparison to the dollar. But this gives us an extreme edge because institutions, they don't want to have a double currency risk, right? Most exchanges, they settle their trades in dollar. We basically settle them in euro. And and we have around 50%. So it's extremely interesting if you talk to institutions. It's extremely interesting if you talk to banks, asset managers. They want to partner with a Europe-based exchange. Now, if you dive deeper into what an exchange is doing, right? They always say sell shovels in a gold rush, and this is basically what exchanges are doing. And this chart is quite interesting. It's about the Bitcoin market cap versus the Bitcoin volume, and you see here in the black stripes are basically the only times where the Bitcoin price is outgrowing the volume, which means in this case, it would be better to hold Bitcoin versus to just trade Bitcoin as an exchange. Other than this, it doesn't matter if it's a bear market, it doesn't matter if it's a bull market, exchanges are printing money with volumes. Now, the difference between exchanges and brokers in the traditional sense. And I think that's quite interesting. So it all started, right? It was a members-only club. You were only able to trade on an exchange with extreme high capital requirements. You had a rigorous compliance and KYB process. You had certain infrastructure standards you had to follow, and it was basically a B2B offering only. This basically stopped until the people also wanted to participate in the stock market, which was the members-only club. And that's why the facilitator, the broker, came into place. So we basically, the people basically needed a middleman, somebody who buys stocks at an exchange and then caters to the end customer. As a broker, like if you're a customer at a broker, you don't need high capital requirements. You have a KYC and AML process. And brokers, they basically net off orders, and I'm gonna explain what this means in a later slide. And what we see now in the crypto space, crypto exchanges are basically something in between. Here, just a simple overview. Like, what is a broker for? Like, what is the reason for a broker? So, a broker, it's the intermediary, it's the middleman, right? It makes crypto purchases very easy. It's beginner friendly. But what they do, they set their own prices, and they add a certain fee. And why this is basically a massive factor you will see soon, because exchanges are just, crypto exchanges at least, they're just built differently. So here on the left-hand side, you see crypto brokers. On the right-hand side, you see crypto exchanges. So what really is the difference? As a broker, still, like in the traditional sense, it's connected to exchanges. Sometimes only one exchange, sometimes multiple exchanges. So what is the broker actually doing? So as an example, it's called netting off orders. So basically you have sellers and buyers on one side. Think about 6 people are buying Bitcoin, 5 people are selling Bitcoin. You're netting it, which means only one Bitcoin order is basically then moved to the exchange. So this is it's efficient from a broker perspective, but if you look at the exchange model, it's literally just a platform where you match buyers and sellers. And the interesting thing is, buyers can be institutions, they can be market makers, they can be also individuals. And this is for the first time that actually you as an individual can become a market maker. And as a market maker, you provide liquidity into the order book of an exchange, which means you make the exchange more liquid. That's why you basically have to pay less fees, right? And if you're a taker, you take away liquidity from the exchange, you pay a slight higher fee, but it's way more efficient. And how this basically works, the matching engine, which we also call, it's the heartbeat of a centralized exchange. So you see the order is coming into the order book. If there is an instant match, it's basically, it gets settled. But this means if there's an instant match, you take away the liquidity. If there's no match or matching order, it goes into the order book, and and following, you become a market maker. Now, if you look at the order book, so what exactly is the order book, right? So it's just a real-time list of sell and buy orders. And here comes the interesting part, because most people are not really aware of the spread. So the spread is basically the difference between the buy and the sell orders. Many brokers, they say they have a $1, a €1 trading fee, but you don't know that they have up to 5% spread in their prices. And this is those hidden fees that it's mostly unknown, and especially for the end customer, quite not really transparent, because the traditional broker, they don't have an open order book, right? So they sometimes mirror an order book, they show something similar, but it's not a real open order book. With crypto exchanges, basically, you have up to, like, you have market makers that provide liquidity and basically always give you the best price. Versus if you're connected with only one exchange as a broker, you only have one comparison, right? You always have the broker as your counterparty at the traditional broker setup. And here you basically can see what is the impact on costs, right? So with Bitvavo, depending on the fee structure, so we have a standard fee structure of 15 basis points, so 0.15% in a maker fee. And if you're on the taker side, so if you do a market order, for example, you pay around 0.25. And roughly a spread of 0.01, depending on the asset class, right? There's like some meme coins, some smaller projects, they just have less liquidity. That's why you have a little bit higher spread. But in comparison to other exchanges, to other brokers, who basically lure customers into a 0% fee schedule, they have a spread of up to 5%, right? And I think this is why Bitvavo in general is placed in a very, very nice spot, because Germans, they're warming up to cryptocurrencies. They understand it more and more, and the next step will be the focus on costs, right? So Germans in general, they're very cost-focused, and that's why I think this is a business model that just works in the mid and long term better. This is Bitvavo, basically. It's not AI, right? We didn't put an AI model over it and put everyone some German jerseys on. This is what we show at marketing campaigns at partners in Germany. We are fully committed to Germany. So they say if you win Germany, you win Europe. And this is basically our yearly picture where we show, hey, this is the Bitvavo team. It's full of internationals. Right at the Kaisergracht, where our headquarters is in Amsterdam. And yeah, we have the same picture with a Dutch jersey, but this one is obviously more attractive for the Germans, right? So yeah, thank you so much for your attention. And yeah, if you have any questions, let me know.
Thank you so much. I think we have some time left, so if you want to take questions, we can ask the crowd.
Please.
One all the way back there. Okay, I'll see about getting you a microphone.
Okay. Can you hear me? Yeah. The what? Custody risk? How do you approach the custody risk? Do you custody on crypto, or do you have many custodians? Yeah, so we basically have multiple custodians, and we use institutional services like Fireblocks. We use Coinbase institutional or Coinbase custody, basically, to spread the risk. But exactly, like this is the highest standards you basically can have in the crypto space with those. Is there any German company custodying crypto here? Yes, so we used to partner with Tangany. Now we partner with Tangany on certain kind of assets, and but basically, yeah. Right now it's with the institutional offering only. Thank you. Welcome.
Any other questions?
You can just say it. Just say it. Thank you
for the really interesting data at the beginning of the presentation. I really liked the transfer of individual ownership in Bitcoin to holdings in funds, which then custody for
Exactly.
But we know when we talk about community now with big organizations and institutions, you mentioned that the sellers here on the individual side are more freshly Bitcoin holders from the last cycle. I always thought that with the crossing the 100,000 mark, that more like really OGs now start to sell off their big bags. And I mean, they're also really strong believers in Bitcoin.
Yeah, yeah, yeah.
Money with it.
I-
Was the intention
I-
what you said?
ex-
Do you have any thoughts on
I think it's both. I completely agree. I know a couple of crypto OGs that basically set their long-term target, hey, if Bitcoin hits 100K, I will sell. I've been in the market when Bitcoin was at 5K, right? I completely agree. There's also some nice information, like from, I don't know if it's a chain analysis, or I'm not sure, I'm not quite sure, because there's a nice chart where it basically shows how the ownership of crypto is changing depending on how long you hold your crypto. I don't have it in my mind right now, but I think you have a combination of both.
I think it's also a little bit the reason why we are lingering so long around the 100,000 mark, even with all of these massive institutional buys, especially companies buying like on every price, you know, and we're still
Could be definitely the reason, yes, yes. And I think there's also a lot of institutional players that are basically shorting Bitcoin, right? So they're hedging their positions. Like, it could be a couple of different factors, but I agree.
Perfect. Any other questions? It seems not. So one more round of applause. Everybody, David Kurz.
Thank you, guys.